Happy Monday, traders. It's 8:01 a.m. Chicago time on the 26th of February, 2018. Not 2016. If we're in 2016, you better get long. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning is bullish across the board. The only products that are lagging: crude oil down 14 cents, 0.22%, trading at 63.40 on the April contract. Japanese yen is down 11 pips, and the U.S. dollar is down 5 cents so far. Everything else long. Bonds, notes, you name it, gold, it's long. So the market's allocating the risk overall. The calendar shows that we have a few speakers, quite a few speakers, ECB speakers and so on. Draghi speaking currently started 2 minutes ago at the same time as this Trader Bite. And then for the rest of the week, we have an even distribution of economic releases starting with tomorrow through Thursday. So I suggest you get a good calendar. You find a good calendar. I do have some suggestions. If you want them, you could just tweet me or send me a message on futurestrader71.com/contact, and I'll be happy to give you that. Let's dive right in and look at what we expected for Monday into our review portion here. The primary idea for Monday was that the market is likely to drift downwards. Expected an open auction on the open, pretty choppy open. Expected a drift down to 27.13, the MC point of control, this black line right here. And then as the market consolidates and we get balance, I'm expecting a break higher. The first area to test will be the 27.26 stock zone. And then the overall expectation is we're likely to push into 27.33 to take that out. And that brings us back to the FOMC SOC, again, 27.33.5. And then I was looking for the market to gyrate there in the afternoon and potentially sell off a little bit, which did not happen. All of this was dead on. 27.13, just remember these: 27.13, a push to 27.27, and a push to 27.33.5 takes care of scenario one. Here's what it actually looked like. We open, and just like you saw in the expectation, chop, 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 drops down. We're looking for 13, gets down to 12.75 right here. You can see the low is 12.75. Took out the 13 by a tick, the MC point of control. And then we're looking for this to start pushing higher. 27.27 was the next area up. Here's 27.2650. It pulls back and it pushes up to 27.2975. But where do we chop around? Right in that stock zone. 27.27 area, and then we get the impulse up and push through 33.5, right through it, pull back, and it just continues higher. Did not expect this run into Friday close, but there you have it. Pretty tight initial balance relative to the last few sessions. And the profile on Friday became a trend type profile. You have multiple distributions. As the market seeks balance, it starts to trade a lot of distributions. You could see that. So this is fitting, and it's closing at high. So this is fitting a neutral extreme. So it started to trend, but we broke the IB low. The IB low was 27.13. We breached the IB low by a tick. It wasn't exactly a one tick failed auction, but it did breach by a tick, and then we closed on the extreme with the point of control near highs. That's the configuration that gives us a high probability continuation into the next session. And that's what I tweeted about at 4:53 p.m. Chicago time on Friday when I came back, that I'm expecting it to continue higher. And that's the scenario that worked out pretty much on the dot. It did blow through the 33.5. I expected some gyrating here, but my expectations versus what the market's action always trumps my expectations. I'm a nobody to the market, right? So here it is. We continue. We open up the overnight session at 27.51.50. Test up, pull back through the key LVN on the Friday trend, and then we hold steady, and then we continue to push higher. 27.61.50, the overnight high, and we're holding in a very tight pattern right against the top. Right against the top. This is quite bullish right now. Look at the kurtosis, or the compression that is occurring at the high of the profile on the overnight session. The volume is pretty good, 159, 160,000, nothing near what we had at the beginning of the month, but on a relative basis, the volume is pretty decent. It is lower than it was the last Globex session on Friday morning. The market's in a holding pattern. We are back to the grind. So if you recall, on Friday in the Trader Bite, I said that I did caution shorts that this is likely to continue higher. Everything is pointing higher, and there it is. So we've taken back the sell-off mostly, and are holding steady, and we're liking these prices. We keep pushing our volume profiles to higher and higher levels, and the point of control shifting higher, trending higher basically, and that's where we are. Okay, the prior session high 49.50 is the week's high, so we closed the week on the high, and then now we're continuing. We're continuing on this pattern. The overnight high actually fell right in the middle of my stock zone. This stock zone comes all the way from the 5th or so of February. That's, it's near the top of the sell-off day, and we are basically outside now. We're just inside of the sell-off. There's the sell-off right here. Let me turn off these stock zones because they look noisy. This is the sell-off day. This is the 5th of February. And the limit, the top of that day from which the sell-off started is right above us here at 63. Okay. And we're pushing up against it. So we've taken out the 54.75 high. We've been on a sideways consolidation zone for the entire week last week. The entire week last week was spent in balance, believe it or not. Look at this profile distribution. Perfectly Gaussian profile with a point of control that is right above at 27.50. Remember, 27.27 has been a key level for about 4 or 5 days last week, and now we've shifted that. We've got a point of control for the consolidation within the balance. This is a consolidation within balance right here. This zone right here. So from the 15th to the 23rd till Friday, we've been trading completely in balance and going sideways and compressing quite a bit. Again, completely Gaussian profile here. A lot of energy cooped up in here, and it is likely to pop through, and we're likely to test the areas above. There are some important areas above us. 28.27 brings us back to the last consolidation. This is the last consolidation before the sell-off. So what we had was consolidation, then we gapped down on the 2nd of February. We trended down on the 2nd of February. That was a Friday. Then we came back Monday and we exploded downwards. And we are basically back on our way back through this template day. The 2nd of February is going to be our template. As soon as we we get above the 63 even, the 2nd becomes a very important day. 2780 is key, and then this high volume node is next. Then we have the gap, and so on and so forth. We're likely to chew through these areas. The overall sell-off, market correction that we had in February looks technical to me. Looking at hedge fund outflows and inflows and losses, it looks like hedge funds are not adjusting, and that the sell-off was mostly technical, and there's still strength there. There's still some strong long bias, in my opinion, based on what I've read. So that's where we are. Okay, so what are we expecting for today? So let me kill the flex levels and bring in the stock zones. We want these to go to the back. I got to figure out how to make it do that automatically. So today is trading way up here. Let's shut these off. Okay. So today we're opening way up here. The expectation, the overall overnight inventory is long. The expectation is for a drift downwards slightly, to start moving back to the point of control the prior day. I'm looking for this 48 area to be pretty good support. It may not close. I'm looking for a strong impulse up and out of this range. I expect there to be a ton of stops here above 63. I expect the overnight high to be taken out at 61.5. So I expect it to push through and then start playing into the next areas above. The next areas above, and that's what I'm looking at right now. So 2770 is the next area up, and that's where I expect the day to go. 4850 is likely to be the lower limit, and then 70 is the upper limit. That gives us quite a bit of range. 22 not likely, but I do expect the market to respond just a little bit before it starts to impulse up. The trend or the bias is higher. Okay. Before I give you the secondary scenario, I want to make an announcement. I just want to make sure everybody knows that there may be a disruption to our daily communion here in this Trader Bite. I'm expecting a baby. She was due yesterday, so any day now. So there may be a chance that throughout this week there's going to come a point where where I won't be here for the Trader Bite. So I wanted to give you a heads up that that's happening. If she's not here by Sunday, then we'll have to induce, and the baby will be coming in on Monday, hopefully. So just in case we get a disruption, that's what it's about. Secondary hypothesis, a scenario: open auction out of range, immediate push up, starts to tangle to 2770 level, pulls back to 2761, and then I expect the market to ping pong back and forth. As it tests higher and finds its sellers, it's likely to go sideways from there. Scenario 2. Scenario 3, open test drive up, fail back through, unable to retest back into the current balance, test back to the 48, and then continues lower. And in that situation, I'm looking for 3350. 3350 is the potential target. That's scenario number 3. All right. So that's what we're looking at. Just keep an eye on order flow. Keep an eye on your plan. Don't just trade blindly off of what I'm doing, because there's a lot that goes into creating these stock zones that I trade off of, and you have to be confident in what you put on. Okay, good luck, and I hope that was short and sweet. So take care, everybody.